Alright guys, welcome back to the channel. So today I thought I'd go through a 1 to 4 GU trade that I caught in my free signals group, which I'll leave a link to in the description below. If I just show you the limit real quick. So on Friday afternoon, this was the limit that we set. As you can see here, live price, running 2%, and then this morning we did actually hit TP for 3.5%. So if I take you to the charts now, I'll give you a full little breakdown of the trade and why we did actually take it. So yeah, let's get into it. All right guys, so starting with a clean chart, I'll take you through my whole thought process behind this trade. Starting on the higher time frame and going all the way back down to the 5 minute where we took our entries. So I think price was about here when I started to look for this trade. So last week, that was the only trade we actually took the whole week. It was quite a hectic week. Actually, it was quite a boring week. Before CPI, which was on the Wednesday, actually CPI was the Thursday, we just basically consolidated and price was moving very slowly. And then when CPI came out, we had sort of this very hectic price action, which wasn't really tradable for my strategy. So I waited till after that, which was the Friday, which is when I started looking for this trade. But obviously after CPI had come out, it came out very bearish for the dollar, I think, or it came out as expected, which means that the trend is most likely going to continue and not switch, which we can see by the price action here. CPI didn't really cause any changes to the trend. We just kind of created this structure point here and then broke a new high, making this the range that we want to be trading in, because this is basically the zone between the high of the price action and the low of the price action. So if price comes below this zone, you would probably consider sells, because price would have broken a major area of demand and you'd look to see if supply was in charge now. But until that happens, what we're looking for is for buys within this region. And the first thing I like to do when analyzing charts is basically just mark on this sort of this range that I'm looking at, and I normally call this the protected low. I know some people have different definition of protected low. It sort of means different things, but that's how I use it. And then for potential areas where we could see price come to before continuing the trend, I normally use anywhere between the 15 and 1 hour, but in this case we didn't really see anything on the 1 hour, so I went down to the 15 to get a more refined entry. And simply all I did was look for any areas of imbalanced price action where price may want to return to. And one level that stood out for me was this area of demand. You can see this is the last sell candle before this big push up, which created a lot of imbalance and inefficient price action and also took out this high. So if we play price a little bit, when price did come back to this area initially, it did react from it, but it didn't really give us any confirmation entries. So I waited again, because sometimes these areas are, if you miss the initial entry, price may want to come back down to retest the level. And if it gives us a valid confirmation, I'll go off the same level of demand. Even though it has already been mitigated, it can sometimes still work, but obviously we need to see that very clear confirmation in that case. So at this point in time, price fell to create a new high. So this was still the range we were looking in. We weren't looking at this. This is not a valid high or low for me, or it's not a valid structure point for me. It's just a weak low since it fell to put in a new high. So we don't draw out this as an area of demand from which we look to buy, because it is a weak low, and weak lows are just liquidity that usually get taken out. So I waited for price to see what I wanted to do. I was actually expecting price to probably come down and take this low, but when I saw this, so our area here, the demand did actually fell because price wicked below it, but I didn't see a close below the level. And then when we did wick below it, price then came up and we broke this area of supply and the most recent structure point. If we go on the 5 minute, you can see we just had this one very bearish candle with minimal wicks on either side. And then after that candle, price just shot up, broke past this area of structure, And from then on, the demand was respected, supply is failing, so we can look for potential buys because our area is, our analysis is still valid because we didn't close below this area of demand. Oftentimes when you see wicks below like this, on the lower time frames, price does close below them, but you'll see big body candles like this with zero or almost no wicks. And then after, price will shoot up and break structure. In that case, you don't consider that as a break below structure. It would be a liquidity grab. And the most likely thing to happen in this situation is for price to continue up and reverse trend. So after I saw this sort of price action, we get rid of this region. What I also noticed was that once price broke above this structure, the sell to buy candle, which caused this area of structure was, which caused this area to break, was this area of demand in here. And if we play price a little bit, we can also see that price generated a little bit of, don't know what that is, get rid of that. Go back. Sorry guys, if we just go back to this point. Right, so what we noticed was that price had generated a little bit of liquidity. We have these equal lows here for from people buying in the middle of the range. Some traders are using maybe the fib tool and they're getting in at maybe the 50%, which is these buyers here. But what we know is that price, when it does this, it may work for a little bit and price may push up, but eventually price will normally come back down and take those people out before continuing its real push. And when it takes liquidity, it normally comes into an area of demand, which is this area that we had marked down here. And in this case, the area of demand is validated by the fact that it broke structure and created imbalance. It's just also a very clean area, single candle creating a break of structure. So at this point, I did just set a limit on this area. I had a bit of a safe stop loss and I put it, I think it was 19 pips just below this area here. I could have just had it at the bottom of this zone, but we do also kind of have this demand in here, which could also be retested. So just to be safe, I put it there. And then I was just simply targeting the high, not the, I think the stop loss was a bit small actually. Not the biggest trade, but it was still a 3.5% trade that we did secure a TP on. So you can't complain about that. Then now if we watch price, see what it does. Notice here, a lot of people may have seen this as a break of structure. We came into this area of supply, you could say, then we broke structure. So a lot of people would probably be selling on the retest of this supply or this one up here. But this is not a valid break of structure for me because we have this area of demand below. When you see demand below like a higher low or structure level, and you see that higher low structure level close below, it doesn't always mean that the trend is switched. It is normally just a liquidity grab, unless the demand below it also fails, and then you would consider the trend reversal. I'll show you an example in a minute actually. But if we play price, you can see price basically just shot up to our take profit. It almost hit on Friday evening, came like 3% in profit, and I did just decide to hold over the weekend. Did have this little bit of a retracement after the market open, but that wasn't really anything to worry about. I just saw that as price retesting this area of demand where we could have got a re-entry if we were awake, but that was at like 1 a.m. when market had just opened. But after that, price just flew to our take profit. So a nice 3.5% on that trade. So before I end this video, I thought I'd show you an example of when price breaks the structure, but it doesn't actually count as a trend reversal, like I mentioned earlier in GU. So I got caught out on this on gold. I think it was like a month ago now, in December. So from like a normal retail perspective of a bullish market being the like continued series of higher lows and higher highs, so price moving like this. At this point in time, most people would consider the trend to have possibly switched, because this was the most recent higher low, this was the higher high, price then comes down. So we are expecting now for price to form a higher low, sorry, a lower high, and then a lower low, making this the lower low here. But what price actually does, it comes to the area of demand just below, which left inefficiency and was basically the sell to buy candle, which led to this break of structure. And is also below this higher low, which is in this case just liquidity. Price comes to it. Supply fails. Most like smart money concept traders are going to be trapped by this like fake change of character, you could call it, where price closes below the higher low but hasn't actually reversed trend. This is just a bullish retest for higher prices. So most people maybe would be selling at this level because that is the order block which caused this break of structure and this impulsive move. But look what price does, we just rally up, sort of wick into it and respect it a little bit, but then we just ultimately come up and break the structure. And you see this all the time. So that is why recently I used to use this as sort of a confirmation entry on the higher time frame, where we see a break of the most recent higher low, and then I would enter a sell on the area that caused it. But recently what I want to see for a trend switch is for this higher low to fail, but also any area of demand below it. I found that works most of the time and is a lot more high probability than just waiting for the higher low to fail. So yeah, if you guys did enjoy this video, make sure to like, subscribe, and also make sure to get in on the free signals group, link in description, and I will see you guys in the next video.